Welcome to Kalkine TV. This is Sage reporting. Here comes on a row the imperative things to know about two such blue chip stocks that can be considered for long-term gains. Since the ebb and flow in the Australian financial scenario amid the COVID-19 pandemic has fueled investors' interest in low-risk investments, often associated with large corporations having a solid financial foothold. Such large cap securities or blue chip stocks have dependable earnings, thereby providing stability in critical times. Although the progress of vaccination programs launched in the country in February 2021 has witnessed a V-shaped recovery in the Australian market backed by fiscal policy measures and record low interest rates. Yet, the side effects from the vaccine reported in many European countries could affect Australia's battle against coronavirus. Nevertheless, the Australian economy rose by 3.1% in the December 2020 quarter, surpassing the underlying expectations. As per the ABS, the country's unemployment rate decreased to 6.4% in the subsequent month, since the rise in consumer activity and the upbeat momentum in the property market have been the torchbearer for the reboot process. It is vital to spotlight two blue chip stocks hailing from the retail and property sectors, which are on the investors' radar. Firstly, comes in a diversified retail company, Woolworths Group, which generates revenue through the sale of general merchandise, supermarket foods and liquor. Woolworths also manages hotels. Its group sales of 35,845 million Australian dollars in the first half of financial year 2021 rose by 10.6% on the PCP, along with e-commerce sales of 2,937 million Australian dollars in the first half of financial year 2021 rose by 77.9%. Additionally, group EBIT of 2,092 million dollars in the first half of financial year 2021 is up by 10.5%, and group MPAT of 1,135 million in the first half of financial year 2021 is risen by 15.9% on the row. Furthermore, its dividend per share hiked by 15.2%. Woolworths witnessed strong sales growth across all businesses except for hotels due to the ongoing COVID-19 related operating restrictions. Woolworths Group also aimed at simplifying operations and achieving a higher focus on core food and routine needs businesses. Now it's time to look at another blue chip based stock out of Goodman Group that closed at 39.35 Australian dollars yesterday. It is an Australia-based integrated property group with operations spread across different regions besides Australia. The group manages commercial properties, residential communities, healthcare communities and senior living. Its operating profit rose by 16% in the first half of 2021 to around 614.9 million Australian dollars, with operating EPS risen by 15% on the first half of 2020 to 33.1 cents. Also, it is gearing at 4.8% compared to 7.5% at financial year 20 and look-through gearing at 16.6% with available liquidity of $2.3 billion. Favourably, its net tangible assets per security rose by 3.3% to $6.03 since June 2020. The company's global online sales, which saw an average increase of 30% in 2020, are projected to demonstrate strong growth in the upcoming 5 years. At this juncture, the digital economy would rely on the logistics and warehousing sector, which is expected to bolster the global online sales trends for obtaining essential infrastructure. Thanks for your time. Hopefully this segment has been informative for you. Till then, smart trading. This is Sage signing off.